Hey, welcome to YSR Shorts. I'm not sure when you're listening to this. I can't be sure of that. But odds are, whether the last recession was 5 years ago, 3 years ago, 1 year ago, 10 seconds ago, if you're like every other investor out there, you're thinking, what happens if we have another recession? And I want to talk about that is, what do you do in a recession? And I have some ideas that might help. If you listen to our short on asset allocation, talked about buy low, sell high, man, people ask me what's my strategy, and I cheekily say that, but my gosh, I adhere to that to the nth degree. Is everybody has that story of, is the market was down to here, and everybody knew that's when you were supposed to buy. I'll give you this one. Is when I was in college back in the late 80s, I worked at a trust company in Boston, a small trust company. They had $1 billion at the time, which was huge, but they were a small trust company. And if you remember, back in the late 70s, maybe 1980, is Chrysler Corporation names Lee Iacocca as chairman CEO. Lee Iacocca, if you also remember, was the marketing director for Ford for years. He invented the Mustang. He brought the Mustang to life. He was the turd in the punch bowl in the Ford versus Ferrari movie, which I thought was hysterical because the guy was really, really smart. They just played him off as this big jerk. And Lee Iacocca came to Chrysler and said, I'm going to revitalize this company. Problem was, they were out of money. They were flat broke. It was 1981, right after the election. Ronald Reagan is in there, and the stock is doing a free fall because it's going out of business. And Lee Iacocca and the Chrysler executives are in Washington, D.C., begging the federal government for loan guarantees. Please, if you could just guarantee these loans, we can get through this. We have a plan. And the stock keeps dropping because this is Ronald Reagan, and he doesn't believe in this. He believes in laissez-faire economics, and we shouldn't be involved in this. And he's playing favorites if he does just one company, and this would be a bad idea. And suddenly, the government agrees to bail out Chrysler. They give them very difficult terms, but Chrysler, under Iacocca, turns the company around, succeeds, pays all the money back. It was a great success story. And the stock went from, I don't know what it was, 12, and it went to 100, whatever it was. I forget exactly what it was, but I would go into the trading room at this trust company, and they would talk about that every single time I was in there. I got to believe it was in every single time. Everybody went, well, if you bought Chrysler in 1981, you'd be a gajillionaire now. And of course, everybody bought Chrysler, and nobody ever bought Chrysler in 1981. Nobody bought, somebody did, but so few people did. There were, if I go back to 87, the crash of 87, there were two analysts. Marty Zweig was one of them. I forget who the other one was, that called the crash of 87. They didn't. They called like 17 crashes in 3 years, and one happened to hit. Go figure. And they're geniuses because of it. I don't look at it that way. There's all these people that tell you, well, that's the shoulda, coulda, woulda. 2008, that was the time to buy. Nobody buys in 2008. Why not? And that's kind of where my strategy is you've got two views of the economy. The first one is, the Bill Paxton. I love Bill Paxton in the 90s. It's all going down, man. Every movie he's in, it's all going down, man. And if you believe that about the next recession, whether it's tomorrow or 5 years from now, which stocks you should be buying and selling is the least of your problems. You should be stockpiling food, stockpiling water, stockpiling bullets. The rest of it's irrelevant. People talk about, man, I'm going to stockpile 10 whole ounces of gold. Whoop-de-doo. I would rather spend that money on preparing things like food would be far more important and land than having gold to trade in some dystopian future that's not going to happen. Human beings are very resilient. We don't tend to devolve into dystopia. So if you don't think that, now you have to wonder, what should I be doing when the market goes down? Me personally, from my stuff, and often for my clients, market goes down, I'm thinking, if my favorite thing in the world is on a 25% discount, I'll forego spending money on other items to get more of what I love at a 25% discount. Just makes sense, doesn't it? I want you to look at stocks the same way. I'm not saying it's going to be perfect. I'm not saying the next recession is not going to put us into the place where we should have, stored food and water and all that. But if we expect that the economic cycle moves up and down, when it's down, that's not a time to be selling. It's time to be buying. So it's hard. I will not lie to you. When things look ugly, especially if you're watching TV, don't watch TV when this is happening. It's ugly, but I have experienced for my clients, when we have bought instead of sold, we came back faster, we came back higher. I think that's important. So if you have questions about that, down in the show notes. Happy to help out where we can. Otherwise, until next time, stay safe out there.
Thank you for listening to our podcast. Remember, the views expressed are not necessarily those of Successful Money Strategies. All content is for educational purposes only and should not be construed as an endorsement of any third party or their views, or as a solicitation or offer to sell securities or provide investment, tax, legal, or consulting services. We believe the information presented to be reliable, but it is not guaranteed for accuracy or completeness. Investing involves risk, including the potential loss of principal. Hypothetical returns do not reflect actual trading and may not be indicative of the performance of any specific investment. Always consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Additional information, including management fees and expenses, is provided on our Form ADV Part 2, available upon request, or at the SEC's Investment Advisor Public Disclosure website, https://advisorinfo.sec.gov.